Hi, this is Mark Woodward, your straight shooting advisor. This is the KANA Private Wealth Group second quarter tactical brief. I hope you all have had the opportunity to spend some quality time with friends and family and are all living your life on purpose. The U.S. 5-year and 30-year Treasury yields on Monday, March 28th inverted for the first time since 2006, raising fears of a possible recession. Last week, the yield on the 5-year Treasury note rose to 2.6361, while the 30-year yield was down less than 1 basis point to 2.6. This is the first time the shorter dated 5-year Treasury has risen above that of the longer dated 30-year U.S. government bond since 2006, just a couple of years before the global financial crisis. The 2-year yield went above the 10-year yield later last week, which is also typically the signal most market strategists look to as an indicator that a recession might be coming. Now, this is against the backdrop where the Fed has said that they will start quantitative tightening, meaning letting assets roll off their balance sheet, and raising rates aggressively to fight high inflation. This initially spooked some in the markets as they fear the Fed may miss the mark by raising rates too fast, too quick, and cause a recession or at least stagflation. Now, on top of all of this, Russia invaded Ukraine on February 24th, and this sparked fears of a more globally involved conflict. It also had an immediate impact on the markets in general and oil and gas specifically. I took a look back at all the geopolitical events over the last 100 years, and when they happened, the markets averaged a 5% downturn, took 20 days to hit that bottom, and then 35 days to recover from that bottom on average. I think the interest rate environment will continue to be a challenge this year for both stock and bond investors, but if we stay the course, history says that both of the general asset classes should come through okay. Now, recently I completed a rebalance of all of our models, and as part of our ongoing screening and selection process, I replaced our U.S. large cap growth fund manager, our mid cap growth manager, and our small cap growth manager in our accumulation models. Our EIG, ETF, and trust models had no tactical changes and were just simply rebalanced. If you have any questions about your accounts or you need help navigating these troubling times, please call me. And remember, at KANA Private Wealth Group, we help you put your family first.